All right, good morning and welcome into Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy, and I've got some bad news for you. You've got me all day today, all right? So that's going to be a tough one, I know, but you have to bear with me. I wore a little bit of a new shirt today, so we're trying to keep things on the up and up. Let's take a look at the markets, because you don't really care about what I have to say. You want to care about what the markets have to say. So let's take a look at corn. What's that doing here so far? Well, no, it's overnights. They're still closed. I'm getting ahead of myself here, right? I don't usually do this time. So this is what we did overnight. There you go. 4.5 cents higher, March corn, 647. Maize, 4.25 cents higher, 648.5. We move over to see what the beanies did overnight. Let's see what we got going on there. They were a little lower, steady easier. Penny lower in Jan, 14.85 1/4. We're 1/2 cent lower in March to 14.89 3/4. Chicago wheat, well, that was down. Well, it was actually up. Sorry. March was up 3/4 penny to 7.47 even. That's a good old airplane, right? And maize at 7.57 3/4. That's up 1.5 cents there too. So quietly higher in the Chicago wheat. How about Kansas City wheat, the old hard red? March contract's up a penny, 8.45 3/4, while maize up just a quarter, just one tick to 8.40 even. Let's go to Minneapolis for the suntan. March is down 1.5 cents to 9.08. Maize down 1/2 cent to 9.07 1/4. Then finally, cotton, see if we got anything going over there. A little bit better, right? March is up 180 points, 82.65. We get it out there early that these numbers are provided to us by bar chart. All right, let's bring in our next guest analyst, Brian Hoops from Midwest Market Solutions. Thanks for being on, Brian. Now, there's not a lot of football left, so what are we going to talk about?
That's a good question, Scott. Yeah, I know football's winding down for a majority of people. Crop report out today, I guess, is one of the things that a lot of clients calling in this morning already are wanting to talk about. It's not going to be a major market mover whatsoever. It's one of the more dull reports because we don't have any supply numbers for the U.S. production. It's only demand. And demand has been pretty poor for corn. I think we've priced in a lot of that already. So the news that we get today, I think, gets absorbed by the market. And really the key is, can we go back down and if we do test this week's lows, can we hold those lows in both wheat and corn? Because we've had some short covering off the lows, and new lows usually begates technical selling and a push to even lower levels. So hopefully that's not the case. Soybeans still kind of struggling with the South American weather forecast, with traders believing production in Brazil is going to be large enough to compensate losses in Argentina. But the meal market says that's not the case. We're going to see more demand for Argentina products, and they're just not going to be there. We're going to have to shift to the United States, and we've seen a big run in contract highs in the meal market this week. So this report really probably not going to be much in the way of excitement, but as we go through the trading session, I think there could be some excitement going into the close. At least hopefully there will be if we can hold those lows and see some short covering develop into the weekend.
So once we get by this report, then we're going to be probably looking for, look, next spring, we're putting in the most expensive crop we've ever put in the history of man, all right? So it's going to be a pretty big deal. We're going to probably look to that January report to kind of get our bearings, because we can't afford really to have the Fed shut down the economy after we put in the most expensive crop, right? That doesn't make very much sense to me, because if your customers don't have any money to come harvest, what's the price of anything, right?
Right, exactly. And a lot of producers saying that the corn price where it is right now, below the cost of production, especially if you're renting ground this year, it's certainly in that category. So we're going to need some higher prices. We're going to need to be diligent risk managers as rallies develop or mature. And, there's some thought that maybe we should be selling or hedging already at this point in time. And if you have your expenses locked in and you can see some profit opportunities there, then it does make some sense. But as we go, like you said, it's going to be a very expensive crop to put into the ground this spring. We're going to need to do a really good job of marketing because of the expenses that are so high right now just to cover those costs.
It boggles my mind still to this day that, my father passed away 8 years ago, but we rent our ground out now, and we rent it out more today than we used to hope to make on it when I was in high school. That's just crazy.
It's crazy.
Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops with Midwest Market Solutions after this. All right, welcome back. Let's review where we closed out these grain or livestock prices yesterday before we open up here this morning. Let's take a look at live cattle in Chicago, what they do yesterday. Is a proper vernacular. Feb live cattle up 37 cents, 153.92. In Chicago, April's up 42 cents to 158.05. If we see what the feeders did yesterday, Jan was up pretty good, 257, and that was a price of 183.47. And we had March up $1.80 to 185.05, and then finally lean hogs. Here we go. We've got Feb down $1.95 to 84.70. We had a $2 loss in April, 207 actually to 90.75. Let's bring back in Brian Hoops with Midwest Market Solutions. Augustana, and where was it? South Dakota, did you say?
Sioux Falls, South Dakota, yes, sir.
And how'd they finish up the year?
Yeah, 7-4. So just
that's pretty good.
That's good. It was a good season, but disappointing that you missed the playoffs. But there's only a couple teams that make it every year, so we were right on the verge. Next year,
there's a private school in my hometown in Naperville, Illinois, called North Central College. I think they're pretty good in Division III. I don't know if you've ever heard of them, but
no, sir.
Yeah, so I love watching that stuff. I think we'll probably see some of those lower divisions on television this weekend. But anyway, as you can tell, I'm burning time. Let's talk about what the livestock did yesterday. Wake everybody up.
So we had a real poor export report in the hog market. The markets kind of fell out of bed. The cutout values were down sharply on Wednesday in the hogs. So, they were down $3 at one point, probably justified with the poor export numbers, kind of had a little short covering into the end of the day. But, certainly the technical picture is bleak for that market. The cattle market's really surprised me. They have a real strong negative seasonal pattern right now that they're enduring. And that does start to change to a positive one here early part of next week. But the surprising part was with the Packers looking at negative margins and one of the worst margins on history. I thought they would start cutting kills back to kind of regain some of those margins. And that hasn't been the case. Kills are maybe down only 3,000 or 4,000 from the previous week. So we're still looking at a big weekly kill. And we did see pretty decent exports as far as beef goes in that report yesterday. Cutout values are stabilizing. One day they were sharply lower, one sharply higher. Now they're just kind of a mixed type trade. But the cash markets have held in there pretty steady, just steady to $1 lower this week. And it suggests that we're going to see higher prices in the next several weeks if this kill numbers continue to be strong.
All right, great content. Have a super weekend if we don't speak. But that's Brian Hoops from Midwest Market Solution. Thanks for being on the show.
Thank you.
I'll talk to you again next week. All right, let's bring it back here to Nashville so I can say good morning to the great Janet.